Good morning, everyone. So it looks like continuation rally or attempt to continuation rally is continuing, right? So I guess the question here is, well, how far does it go before the sellers show up? And try and figure that out. I have some idea. I hadn't put the screen up yet, Fabio. I wanted to do something just for fun and see what general opinions were here. And those on YouTube, you can type it in there if you like, but there's an idea for the members in the room here. And just looking, most aren't here, but we've got enough here to do this. So you're going to see a poll launching there. And well, Dan took his thing away. I don't know how I show it now. How do you show that? I don't know. Doesn't show me a way to show that. It's terrible. Okay. Well, I don't care, for Lawrence, how you pick the level. I know you're joking. How you pick the level doesn't matter. And just to pick a level. And oh, shoot. What is that down there? Good morning, Sunil. All right, so in YouTube, you guys can't see it. I thought you'd be able to see it. Maybe if I throw it on top of the screen, that would work. Screen 2, so to show a screen. Oh, just spitball it, Robert. So as on YouTube, I put a poll in there to say, where would the market go today? Meaning how far up will it go before it stops going higher? And so the first choice, and I don't know if it's going to show up, the first choice was today's 30-minute high is going to be the high of this move that started yesterday, and the market will start to correct. So I said within 25 points, give it your best guess how far the S&P 500 cash would go. And so that was 2750, 2800, 2850, 2900, and 3000. So 39%, 30-minute high, that's it. You're done. Put a fork in it. Right? 19%, 2750. 22% said 2800. 15%, 2850. And 11%, the lowest percentage, said 2900. And zero said it's never getting to 3000. It'll never hit it. All right. And Joe saying 2800. Okay. John on YouTube says 2800. And then I said, will today close above its opening price or below its opening price? 50-50. It's a standoff, which maybe means today is going to be an inside day, like a consolidation day. It's going to gap up here, right? And then maybe go nowhere, right? Sunil saying 2850. So it's changing a little bit. I didn't close the voting yet, but the greatest percentage was today's 30-minute high. Would be the high of this move before a correction starts, followed by 2800. And the others were relatively close, but I thought it would be interesting. And above the open just got a very slight push to 53% versus 47%. So overall, it's kind of like, again, a split to say it's going to be a 30-minute high, but the greater than half say it's going to close above the opening price. Right? So this is what I came up with. I'll show you here. So I'm going to close this polling here. And it's all a guess, right? But so here's the spiders. Now, the whole idea behind a move like this, which we weren't sure which way it's going to go, it's a crazy kind of a move, right? We talked about how the futures look different than the spiders. And this is a bad tick. And as we know, last week was the gap down. The sideways Friday was weak. And I was like, this should go down. And like it gaps up and just kills the shorts. And you know, the buying was strong all day. Some attempts to roll over. You can see here, it didn't work. So this pattern, and when we see a pattern, it suggests, well, historical patterns suggest an outcome. So this historical pattern in a downtrend, making a higher low and a higher high suggests a measured move. So what I did was I went to the SPX, and this is all theoretical. And this is what a measured move would result in, right? Up to this level around 2850. So now it's kind of, let's do this for fun. Let's see what next bar forms. Let's see if the historical pattern actually plays out. Now, with this pattern of a higher low, higher high, right? Now it doesn't have to get exactly here, but what you have with this kind of a pattern it is still below major resistance, is that this higher low, higher high pattern sets up your classic sell setup on the higher time frame. Okay? So it's fun to do this, and we'll see how it actually plays out. And maybe by the end of the week, we'll see what it does if this rally continues. Now, just if it has an inside day here, and we'll look at the futures, and I'll go back to spiders, and we'll see where this is as far as the gap goes. But we'll come back to this and see where this actually plays out. So spiders, it's not the spiders. Spiders, right? 273, 274. So it's a nice gap up into this little area over here. 274. Not really much there, and it's clearing this resistance. So it doesn't give us a real obvious place to trade against, but okay, so all right, 274 is kind of that gap fill area there. And so any pullbacks should stop in the area of this spike, give or take. So we'll just see how that plays out, since it's already up toward that resistance. And then we look at the futures. Right? We look at the futures here. And I did the same thing with the futures, and it put it, you know, up in this area right there. I don't know if I can put the price on there. I think I'd have to type it in. Yeah, that's how long it is. No, 18 bars. Forget it, whatever. You can see it's at around 2850-ish, 40-ish. And so we really don't have any obvious clear resistance here to the left. I'll change this to a 180-minute chart, kind of condense it up a little bit without squishing so much prices. So you can see the S&Ps have some room to go up toward that area of resistance. Qs already up through the 200, right? They have shown relative strength, but they're up into resistance, as you can see right over here. It's the top of this range right there. So it's not like the S&Ps and the NASDAQ have room before hitting resistance. Maybe the S&Ps bring up the rear. The 50 MA is lined up over here. And we could do the measured move thing just to see where that kind of plays out. Make it a little fatter so everybody can see it. We just go to where the move started, and that would put it around the 50 MA and 8,600. Okay. There's some levels that we can see. And this typically plays out quite well, right? Where these things set up like this and they move into resistance anyway, which we know is there. But the measuring of this move is a phenomenon that I've seen for a long, long time. Won't there be a W bottom retest which measures what might, well, no, it doesn't. At this point, what I said yesterday, pre-market, was that the length of time that this was putting in over here and the strength that we were seeing pre-market, I was saying that this kind of throws the bias or idea of a classic W bottom kind of out the window. Because you typically don't get this many bars. They go up and it's like 1 to 3 bars and it comes back down. And remember I said, you know, the futures are starting to look like this bullish consolidation and flag, you know, especially looking at the, you know, the ES. So I said, now what I was saying was we got this weird difference in patterns between the day chart and the futures chart. And so now this has resolved itself to the upside as of yesterday, and it's following through today. So with the gap up, I imagine there's going to be sellers into the gap up for those that held overnight to take profits, and we'll see, you know, how much supply that can create. And you know, so we'll see that at the open together. Well, if you wanted to do it on the Dow, we can do that just for jollies, whatever. So I'll just and then I just take the same line and put it over here to where it corrected to. And it puts it in the area of the 50 MA at around 2,500, which is lined up with this resistance there. What makes me question V-shaped recovery fundamentals aside? It's just something that doesn't happen that often. When we saw it happen years ago in the S&Ps, the NASDAQ actually made a W bottom. So I don't question things until I only see what is, right? So when I see what is, certain bars then point to an outcome. And as more information is created, a new bias can be created by those bars to a different outcome. So my opinion is based on what I see on the chart, not what, you know, I believe, or I should say what I'm predicting is going to happen, right? And fundamentals really don't come much into it, but as far as the concept of techno fundamentals, I said a few things, actually. I said that this move from a bullish extreme to a bearish extreme historically is very positive. And that was a little bit of a fly in the ointment to the W bottom, but it didn't mean it didn't have to happen. Okay. The other idea that I had mentioned, it's not that, maybe it's this chart, was the fact that this doesn't look right to me. Oh. Something's up with that. Hold on. I don't want to spend too much time here. You know, Dan's got stuff to cover. Here. When this all started at the top, right? When I was saying somebody's going to get hurt here, right? And the sentiment was in the stratosphere. I said these shorter term internals are deteriorating, and that's a problem. And now we all know what happened. And then later on, I said, besides the big move in the internals, I said, you know what? They're really doing the right thing here. Look at this fast move in the repair of these yield curves. So there were positives along the way within this disaster that occurred. And so, again, just repeating, but what my opinions are based on is what I see, you know, other than someone that, oh, you know, whatever's going to happen. I have to change because the method that I follow forces me to change, right? Not get stuck in the past. So at this point, this is what the pattern is pointing to up at resistance, and then we'll see if it gets there and what it looks like when it gets there. All right, so sentiment is still there. They're not jumping all in with 2 feet. But what I wrote in the letter, while we had that S&P and a lot of other charts suggesting lower, what I said in the letter, if you go back and read it, was if this market goes down on Monday, do not be surprised if it rips right back up to the upside because the internals are more bullish than they are bearish. All right, let's get going here so Dan can get going. All right, so the Russell has been the weaker. It looks like, you know, it can get through this area. It's got a whole lot of room to continue higher, but it is up into resistance. Crude oil, just chopping around, doing nothing. Bonds down here a little bit, as they should be, based on the market up. But we went over last week that they were at resistance, and they were trying to build a new launching pad. That has failed. Gold, nice move yesterday and got a little ahead of itself and coming back down. Silver, right? We talked about this pattern of chopping sideways and the fact that it wouldn't go down. And this looks like a measured move to be able to push higher up into this area. And of course, the transports are participating, and that's a good thing. So should the market continue higher, as the patterns at this point in time suggest, we want to see the Russell participate and the transports participate, right? Not be left behind. All yours, Dan.
All right, good morning. I'm just giving a quick adjustment here on CVX. Let's sell a third here pre-market for a almost $4 gain. Yeah, so we did very well yesterday, you know, finding individual patterns that were fantastic. So we have 17 open positions, all bullish. And I had a bunch more on our list for today that I didn't want the overnight gap risk. And I said, let's move it. Let's enter yesterday's high, RCL, UAL. I had a ton of them lined up. All right, I'm just posting this. Yeah, I'm not talking charts because hold on. I'm trying to get CVX. I was busy posting alerts pre-market. So for you all who do not get our texts, feel free to ask me if you want any adjustments. I'll try, I can like post them all if you want. But I was pretty much on our longs selling a third pre-market and moving the stops to the closing price. And that's what I'm just doing right now on CVX. I'm still bullish on oil. I also posted XOP. having a nice gap breakout. So I'm not going to even look at our longs right now, but it's going to be a little tougher to trade because of the big gap up. So look at XOP. It's gapping up to 38 out of this long base. This is beautiful. Target somewhere into the gap. So XOP looks fantastic. We'll still be looking for stocks in those sectors. FANG I like over the high of these three tails. Aslam, okay, you're trying. No, but what, so good, Aslam's asking me, hey, how come I'm not getting filled pre-market? I'll tell you exactly why, Aslam, because I got filled on every single one of mine. When it says time in force, you know, where it's typically day or GTC, exactly, Robert, you got to put EXT, which means extended hours. Yeah, because I've been selling like mad pre-market at thirds, and the bell's been just dinging all morning. So yeah, thanks for asking. I mean, I can. Well, here I'll just glance at a couple of our opens, our GB, and tomorrow MT Live we're going to be talking about the patterns to trade on these turns. This never in my life have I seen so many W bottoms right now after climactic buy setups. So we were having a field day yesterday in these type of patterns. This was one, our RGB. Shack was one I didn't post. We did Denny's. And then we did different ones. We did different ones that weren't a typical W bottom, but we're going to be talking about this also. Bar by bar analysis, you know, what is the pattern that got us in? So Qualcomm we did, it's a breakout. And we sold a third of that pre-market. Intel, same thing, gap breakout. We sold a third of that pre-market. It looks great. The 15-minute chart. Look at that. That is very controlled strength. So that looks higher. Yeah, Coke was one I wanted to get into today over the high. Yep, there's so many I missed. But it was it's a judgment call. The market just skyrocketed. Here's one we entered, MGM. And this is, just a higher low controlled pullback. It's not a typical W bottom. And we scanned all of our beat up sectors, ERIs in the casino sector, along with that MGM. This was on my list today to buy over the high, and look at the gap, messing it up. RCL I had posted, buy the high. Now this one's weaker because of the deep retracement, but we're getting in on the basement floor with a W pattern. Now look, it's gapping up $6. That would have been a 20% gain had we entered. And I did say that. I personally didn't do it myself. I chickened out. But I did say into the close, I said, this looks great. If anybody wants to nibble ahead of time, and if you did, you got rewarded for it. UAL, the airlines were not ready yesterday, but UAL was on my list for today. We're just wanting the potent turn. And I kept saying over the last few days, we don't have a turn yet. We don't have a turn yet. Today's gap, if it can hold, might be the turn day. Delta sloppier. So I actually like JetBlue and UAL the best. This one, see, it came down sloppier. So those are the two. Nah, that one's sloppier. So when I talk about sloppier, it's the way it came down with gaps, tails, overlapping bars. I just think this one's just cleaner to me. UAL and JetBlue. Those, you can have a difference of opinion, but those are the two on my list. Hawaiian, yeah, I'll add that right now. Sure. Save, Save is okay. So yeah, I just added 2 more. Another beat up sector, hotels. I've been watching, but see, here's another example. Breakout failure, overlapping bars. Is it a retest pattern? Yes. With a gap up. Could you have shorted a put spread? Yes. And I looked yesterday, but they were either not good juice or the premiums weren't as attractive. But see, this is a field day of these overcooked, retest patterns. And that's exactly why that's going to be tomorrow's subject. Hilton's a little better just because of the way it came down more. This is a put spread candidate. But look, now it's gapping up $7, 6 and change. It's gapping up here. So I missed the trade. But yesterday was good. Marriott was on my list yesterday. And that one closed well too, with a beautiful 15. Wow, just so many compelling patterns yesterday. All right, let's continue. All right, DGX was another one that McGraw, see that's, well, not March puts, we're past March. Oh, Marriott, my bad. Yeah, no, I looked, I thought the spreads were too bad. DGX is another flavor of our retest with a 180 reversal. So we entered that yesterday. Here's another one on my list. VRNS. It's a retest pattern with a gap up, closing at the high. That looks good. This one's gapping down. I think it had earnings guidance or whatever. You're gone. Abgo said something with earnings or something. But a bullish consolidation over time. We'll be talking about this tomorrow. This pattern that does this as opposed to come down, building support over time. So that looks higher. But remember, I used the term, the easy entries. I said it at the lows. I said it here at the lows, and then up here I said the easy pickings are gone. Yesterday was easy, I gotta admit, but now with the big old gap up, it's not easy anymore. Pavel, is it already too late to put PCA? Put? Do you mean selling a put spread? I don't know. The answer is going to be, let's go through our checklist. If we get compelling setups that are not extended, then no, it's not too late. Exhibit A right here, UAL. 28 is, look, I know it's up a big percent, but mark it on your chart. If it closes up here, no, it's not too late, but we got to go through the rest of our checklist, right? Which is what? It's, and oh, today's actually coaching. So we're going to talk about that again as review. It's going to be no pending news, liquid options, good juice, and that's it. So, we'll see. Disney, sure, absolutely. Yeah, that one's not too late. So go through our checklist. It's gap into 104. No, the pattern wise, it's not too late. You know why? Because the put spread has to be yesterday's low. And this is a gap breakout. So the pattern is not too late, but we have to just go through the rest of our checklist and make sure they're liquid and good premium. Now, option expiration is this Thursday, this week's cycle. So you know, provided the broader markets are holding up, I'm okay with starting to sell next week's put spreads. And look at play, bottom right. Look, play is not too late. I was watching this one yesterday. It's another retest pattern. And this pattern ain't too late. Look, this thing fell from 50 bucks. It's not too late at all. But your stop's going to be big. Stop's going to be big because it has to. It has to be under this end of day base right here. Ludwig, we don't keep them on the web. We email you a link. Email you a link that you can watch afterwards, but we don't store them. All right, so yeah, with the big old gap, just like yesterday, I'm doing nothing now. Look at Marriott still going. I can't, woulda, coulda. We were very aggressive yesterday, more than I imagined. And we picked much better patterns than these, but yeah, the hotels are rocking for some reason. RCL, this could be,